All right then. So thank you everyone for joining our Leveraging Price Management Solutions to Protect Margins webinar. We're so excited to have you here with us. And in this webinar, Jeff will provide clear tactics and price strategies that will enable you to stabilize or reduce margin erosion today, improve your pricing positions, and future-proof your business to avoid contributors to profit leakage, and so much more. So like I mentioned before, please feel free to write any questions that you may have in the chat box. And at the end of the presentation, we'll get to those questions. So a little bit about Jeff. He has extensive real-world experience delivering pricing excellence through best practices. He also has an extensive background in large B2B and B2C operations, as well as prior finance and merchandise procurement experience. So, and he's also a car lover as well. So when it comes to this topic, he will be able to give us a better understanding of how you can protect your margins, how you can future-proof your business, not only the automotive aftermarket industry, but other relevant industries as well. So without further ado, Jeff.
Great, thank you. You're right. Somehow you figured out that I was a car fanatic. So it's interesting that and I'll do just a quick intro on me in just a bit, but it's interesting that I've got this slide up here first when you take a look at what is the recycle automotive industry or the salvage industry, no matter what you call it. But if we think of, hey, in the new market, I think of a door for a Toyota fitting a certain set of years, and of course it's going to have a different color and maybe different trim, giving it a different SKU. So suddenly one door can have like 35 different SKUs, to a retailer or to the aftermarket. In the salvage industry, you take a look at all these doors, whether it's a Ford, Chevy, or Toyota, it's going to have one SKU. So talk about not having enough data. You're selling all these parts. They have an attribute that's called a door, and you got to figure out what your profit margin is. So just a little side note there. So a little bit about me. I've been in the pricing software space for 7 years, serving in roles that focused on demonstrating the power and value of pricing and quoting solutions. Prior to that, my career was in the B2B and B2C space of automotive parts distribution. I'm happy to say that my entire career has been focused in that area. I realized firsthand the pains of dealing with hundreds of thousands of customers in a customer master and pricing hundreds of thousands of SKUs, utilizing tools that just simply are not scalable. Simply put, I too lived in Excel, Access, homegrown solutions where there was a need for scalable enterprise-level solutions. In my pricing experience, I've managed the rebate process, price agreements, publication of customer price lists along with channel pricing variations. Managing all those pricing rules, configurations, and exceptions truly takes a team effort. But more than anything else, it requires system support from a price management and optimization solution to put a realistic handle on the complexity of managing the distribution world of pricing. So with that, let me allow to maybe share a little bit about a prior business experience that I've got. It really left a lasting impression on me and has a tie into really the topic of accurate quotes. I had a quoting preparation experience many years back with a set of potential business partners traveling this country to negotiate a purchasing agreement. I was charged with preparing a quote with dual languages, dual currency, and most of the discussions in the meeting occurred through their delegate that spoke English during this time, but there were many side conversations in their native language. When the quote was presented, a senior member of the group spoke up and responded, and by the way, in perfect English, that he preferred to buy from the English side of the quote for this one item. The firm that had done the quote translation had made a currency error. The lesson here is, don't underestimate your audience ability to comprehend far more than what's being presented. In this case, it was language. So our first topic is challenges in changing times. And we've heard that a lot lately, challenging times, the new normal, what tomorrow looks like, how daily life is forever altered. Let's do this. The topic of COVID-19 is in the news and no doubt impacts us daily. But I want our time together today to be centered around enabling how price management can be leveraged in the automotive industry. So if we think of some of the common challenges that we see, competition, for sure. Name a business that doesn't have competition, and I'll show you the utility company. Though that might be debatable in today's solar and alternative energy world. Parts proliferation, maybe a new word to you, maybe not. That's a given. It's been happening for 20 years. It's been a successful strategy by manufacturers, and if managed correctly, can be profitable to the downstream suppliers. Product life cycle. Remember stocking rear window louvers or cup holders, carburetors? Long gone now. You need to be predictive with your sales model to know when to trim inventory and adjust pricing so that you're not the last one with inventory that's not moving. At the same time, if you're focused on niche markets, then you need to have visibility to a rise in demand and begin to maximize profits before you sunset that product. Customer demographics, preferences or changes. Case in point, the rise in popularity of utility vehicles along with hybrids and electrics. Your price strategy must change to reflect the constant input of, name one or many of these, market indices or market share and reflecting those changes, inflationary indices or adjusting your contracts and price agreements, the ever-changing input of raw goods, inventory availability and maximizing strategic buys, and of course, competitive positioning. Competitive inputs, if you use them, should be crisp and nimble enough to guide you to what the market forces are telling you, and we'll talk a bit more about that in the data section. You've got to disrupt the status quo. Is the market sending signal pricing? Who's got market share? Is it growing? Are you tuned into it? Are your competitors signaling to the market with their price adjustments? Is your market intelligence able to discern true data from the noise? All these inputs should be part of your price data gathering and used appropriately in your price strategy. So while COVID-19 has had its impact on transportation, and if we think of the driver segments in your markets, one example of this is your occasional Uber or Lyft driver that now does this full time and they're racking up miles on their vehicle. If they were a DIYer, do-it-yourselfer before, most likely they've shifted to a do-it-for-me, based purely on hectic schedules and lack of free time. Customer demographics are shifting. In 2019, we all thought that autonomous vehicles were the rage. We saw test markets being expanded for these vehicles. In 2020, Deloitte did a study and found that the consumer interest in AVs is stalling. But yes, it's still in the news and won't be going away. Electric vehicles and their separate and unique set of parts in the market continue to gain market share. This growing segment is not your DIYer, but is geared for shop and dealership repair due to complexity and the diagnostics involved. This continues to support the long-term trend from DIY to DIFMer that we've seen over time. We talk about end consumer preferences for a moment here. The connectivity of vehicles, that being onboard diagnostics, infotainment, navigation, fleet management, scheduling software, that segment of the market, specifically the over-road vehicles, is expanding rapidly. Simply put, vehicles continue to get smarter, repairs get more complex, and obviously more costly. So moving on, your price strategy can't remain stagnant. I'm working with companies just like yours that are creating price strategies that combine a large number of benchmarks and inputs into a tactical and product category specific price strategy. I can say for the majority of customers I work with, the use of price optimization, really no matter how you define it, is no longer a nice to have. Simply put, it's a requirement. You can't manage the segmentation detail and price variability across channels without a tool that's supported and enabled with AI. Let's touch on competitive pressures. You're watching the marketplace now, you're seeing acquisition cost changes, and as a result, your competitors are changing price. My guess is you've done one or maybe several rounds of price adjustments to reflect changes in your cost to serve elements. For those with heavy price agreement administration or contracts, you've been seeing and adjusting your contract pricing to reflect the inflationary rules written into those agreements and disrupting the status quo. Hopefully, we've got a tool that serves those price recommendations up to you on a dashboard designed for monitoring and making use of those price change clauses. This brings me to someone that knows about seeing value and understanding price. Who doesn't know and hasn't heard of Warren Buffett? I personally like these two quotes because they resonate with me and I find them timeless. I'll pause for just a moment. The pricer, you've got multiple masters that you have to respond to. Your role is looked to for serving up that prescriptive analytical truth along with setting prices. You're leaned on for forecast values, called upon for board presentations, and almost always involved with quarterly business reviews or the equivalent of that. Last but not least is a customer that votes with their dollar. One way to measure how you're doing is the number of phone calls or price disputes that you're getting. Simply put, my phone never rang to say thanks for the great price. It was always the other way around. So if your measurement of price pushback or price exceptions has become unusually quiet, you might want to review your price modifies or price adjustments, whatever your terminology is, and view those lower ratios of adjustments to total sales for pricing opportunity. Your customer is telling you by not pushing back on your price. Second topic is speed. Speed counts and speed wins, whether it's Monaco, Daytona, Indianapolis, or Le Mans. What they have in common is speed. And how they get there is the definitive nuance. Monster trucks have power, but so do NHRA dragsters. It's more than just power. It's also about strategy and testing that strategy. It's not about speed. It's all about speed. Speed in business comes in many forms. You may measure speed uniquely for your business, and that speed might be measured as time to market for a new product category, and beating the competitors with a product and service. But many companies strive for being first to market, and yet other companies choose to let others blaze the trail first. The speed in quoting has always been important. I mean, really, who wants to wait for a quote? A recent study shows that a large majority of winning quotes are awarded to the vendor that's first to respond. Sure seems intuitive, especially when that leaves you more time for selling. Having an effective quoting tool, typically a CPQ solution, will enable that speed. Then there's speed in pricing. Often can be measured in reaction to market forces, view that as competitive pressures, or cost fluctuations both up and down. Anybody that watches Amazon and their ability to adjust pricing variability, you just have to sit back and shake your head at those that try this with manual processes and tools. It's simply not scalable. Those that adjust their list pricing or dealer net, and perhaps it's just done once a year, they're rethinking their take on that view and adjusting more often to capture cost and market changes. So let's walk through at high level what speed might look like when integrating competitive information into your price strategy. Let's walk through a 4-step process. The price spec solution is highly configurable. So don't get the impression that there's only one way to work through leveraging your competitive data. Your first might be the input or ingesting of some harvested competitive information. If you think of, creating channels as to where those prices are coming from, you're managing maybe multiple currencies. If you're a global organization, you've got items that are perhaps time bound, meaning here's the January price, here's the February price, and you're starting to really understand the nuances of all that raw data coming in. But at this point, it's just that raw data. You're taking that and you're transforming it into a strategy. If we take a product category of maybe rotating electrical and think of alternators, and maybe you've got a standard line and you've got an economy line, you're starting to set your pricing out. In this case, it might be competitor base, where your positioning might be 5% above the competitor. In your economy line, you want to show price leadership and be 2% below the competitor. You're starting to build that strategy out line by line. It ultimately is going to live in a price list, and this is just designed to be a representative price list, where you've got the granularity of your part numbers, you've got your price strategy called out, you may have your cost and many other benchmarks that are in there as well, ultimately building up to your price where you're going to publish that out. And then finally, you want to do a review and retrospective on your pricing impacts. Are you really getting those price impacts? Are you realizing that price? If your pro forma says I was going to get $1 million out of this price lift, what did I actually get as a result of it? Moving to another automotive industry, specific challenge and profit leakage, it's clearly supersessions. So if you're in the parts business, then supersessions, and probably cores, are part of your everyday pricing routine. Let's take supersessions as an example to avoid leakage. There are a number of challenges with keeping the parts supersessions organized. You need to have a clear chain of supersessions, and you need to price them according to your part strategy. You also need to have analytics at the part level and supersession chain level to manage the entire supersession journey. It goes back to that part lifecycle challenge we touched at the start of this session. Without full visibility into the supersession chain, you don't have complete and transparent visibility into the profits for that product category. So within the tool, I've taken one part number and we've called this a 34, and we're taking the journey to a superseded to 34A. It eventually becomes a 34B, C, and the journey continues. But ultimately, the product category manager is going to want to group those together and say, hey, I've had variants of this. I'm going to group them together and display some analytics on how that supersession group is doing in terms of profitability, unit movement, etc. So this tool is highly configurable. The naming of these columns is up to you. It's not an out of the box. We'll configure these names, and then it has far more information to the right, such as the date of these supersessions, etc. So you'll hear me say this from time to time, that it's highly configurable. The tool and capabilities are not cookie cutter, but tailored to your business requirements. Let's move the journey from data-driven supersessions to the overarching topic of just generally data. Data drives decisions. More importantly, data drives great decisions. So data is money, full stop. And there are companies that deal in data, both generic and specific. That's no surprise. Think of your personal credit score and Report as an example, and we can name off 3 companies that deal in that type of data. In the automotive aftermarket industry, there's an abundance of third-party data as well. There's IHS data, formerly Polk, JD Power satisfaction data, Yukon parts data, Frost & Sullivan market research data from Shop Management Systems. You name it, it's out there. These companies leverage that data in their commercial model, but much of it is available to you too. Your business is even more granular data from your B2B transactions and B2C point of sale. That's of immense value. Real time, with the ability to trend that sales data, along with regionalizing it and seasonalizing it, you might be ready to be part of a data collective that shares that information, anonymously, of course, to offer insights on how you as a business are performing relative to your market or segment. That's incredibly powerful. Are you leveraging that? Well, you should be with effective price management solutions. And I'll go on to, is your data clean? Many companies have grown through acquisition. There's no surprise there. That means multiple ERPs, CRMs, product and customer master data files. The case in point here is when a single customer of yours has 2 different IDs in your 2 or more CRMs, etc., you don't have clean data you can leverage. Customer business is then split. Contracts can't be managed effectively. Rebates can't be administered properly. And you don't have a holistic view of your customer or their business trends. But all hope is not lost if you're in this situation, as there are companies that support those that need to scrub data. And they're specialized in this. But it comes to the question of too much data. Perhaps, perhaps not. You have to assess what level your data is and how sufficient it is. So if the answer is yes, I've heard that as referenced as being data saturation. Think of it as an example. A city grows rapidly, but the infrastructure doesn't grow with it. The end result is too many cars on the road, delays, crowding, traffic, accidents. But too much data in the aftermarket setting might be when aggregating purchases by time of day, where the price won't be changed based on that metric, or the number of passengers in a vehicle through biometrics, vehicle management systems, etc., and wading through all that data to get a simple warranty rate on a product category. But perhaps the answer is no. The far louder cry is not enough data. A recent example is a company I engaged with that had fantastic transactional data, but no real-time cost allocations for that transaction. All transactions had to be costed separately, and it was at the end of the week for a true-up process. How can you get true profitability with delayed cost of goods calculations, or worse yet, combine that with lack of cost to serve elements? You've started a guessing game with customer profitability. Analytics. Sure, those are powerful, but they can also be mind-numbing. Charts or reports should lead to action for the typical price or sales analyst. Yes, they should be set to inform at high level for groups or investors like executives. If you think of charts, reports, graphs as being arrows in your quiver, then effective pricing and quoting solutions should crisply identify, here's a couple of examples, underperforming customers, products, markets, reduce the size of that ocean that you're fishing in. Variances to plan, variances to actual, variances to budget and forecast. Are you still producing reams of paper showing every detail, or are you managing by exception? Visual and contextual charting. Colors don't whisper, they scream. And they scream when you cut them loose to tell a story. Be a better storyteller. Top and bottom performers. Let's focus on the part of the business that needs focus, or protecting those customers so we don't lose that portion of it. And I'll wind up on waterfalls. Or simply put, those priceless charts, and if you're not using them today, get yourself starting to use waterfalls. Either comparing one time period to another, or a price waterfall from the left side of gross to the far right side of net. It's pure money when you have a comparison waterfall, comparing a customer with another or a product with another. Let me offer up some examples. And I'll use inline analytics, which are a powerful tool in your toolbox. So standalone charts are good. The journey to becoming great is when your charts are embedded in your pricing tool for users to make decisions. No, great decisions, right then and there. Always informed, always transparent, always data-driven. So if we think of a price list as pricer is heads down looking at all the rows, all the columns, and you know what? It's a bunch of numbers. The ability to have a chart embedded within there where you can take a look at maybe peer pricing or other pricing or a waterfall to show profitability of that. That's one example. And whether in this case it's a promotion that you're managing, you're taking a look at the promotion KPIs, you want to see the impact of that promotion or that promotion line that you're looking at. Perhaps you're in a quote and you want to see the deal score. If you want to render and show margin to a sales rep, you can, but you can also show cross-sell, benchmark of how that item is doing in comparison with its peers, and see a scatter chart of the other similar discounts. Click on any one of those and you'll render a chart of your choice. And it doesn't matter whether it's a bar line, a comparison waterfall, where you're comparing, in this case, three items. It could be customers, it could be products, building up to a country list price. And now you're starting to get the variability through your cost to serve elements up to a invoice price, all the way down to a net margin, is served up within that tool. If you're a bubble chart user, where the size of the bubble means something, the color of the bubble means something, you can serve that up again, real time in the tool. Win-loss review right there. Scatter plot, wonderful for margin hunting, where I want to see those customers, those products that are perhaps below a bench line in order to start hunting for margin. Turn those charts into actionable items. And then finally, maybe a price waterfall, where again, a base price building up through some adders to a list price, ultimately to a country adjusted price. Your multiple cost to serve elements are starting to show you what a net invoice price would be, all the way to the far right, which is a net margin. So on that note, one of the common themes I hear with companies seeking quoting tools is the need for win-loss KPIs. We often think of quoting KPIs as getting to a win-loss analytic, but many times I've seen companies fail to gather the leading data that winds up and builds up to that win-loss metric. Here we see a typical win-loss chart with additional metric of presented. It's a simple addition to the quoting process, having the rep mark a box in a quote, And additional metrics can support that win-loss KPI generation with a further addition to accepted. So it becomes a 4-step journey to be presented, accepted, is it a win, is it a loss? So having those data elements allows you to better manage your quote process and, more importantly, the sales effectiveness of your revenue team. This allows you to measure the quote turnaround time, an important KPI for many companies that are measuring sales effectiveness. We'll move on to price variability. So let's see how a fairly large company leverages their data. You may have heard of this website. You can leverage those insights that are out there already. It's Amazon's Camel. So this is a long-term view. We can see that we've run this slider scale out to the far right side of pricing for this particular Bluetooth speaker. And let's add some third-party data, and that's in blue here. And we can see Amazon's action, and we can see that third party's maybe reaction, or they're overlaying their pricing decisions, as this is a pricing chart, over time. But I'm going to move on to a 3-month view. So let's pull back from that longer term view to 3 months. And you know what? I'm seeing a couple of stories that are happening. And there's two that kind of come to my mind. Could this variability in pricing be a price test? One might be to grow share. So they're adjusting price, and you can see a low of $299 on the right, high of almost $400. Or maybe there's a test to compare the competitor's reaction and reaction time. So we'll come back to this slide a bit later. My question for you is, how do you leverage that competitive data in an organized and process-driven way? So the concept here is to have a process, one that can flex with your business needs, doesn't require IT programming, and can grow with your product expansion and brand changes. These business rules, or parameters as I'll call them, are controlled by you. So this is an example of a friction category and a single competitor, box retailer. We have a breakdown of the product line details and the competitive positioning in relative terms to their price as a strategy. So they may want to use this as a source, this is their competitive positioning, and you know what? It's not similar to other competitors' products. So I want to make a different decision on that. Compare that with this line where you want to do different strategies based on your region, and your positioning is going to be reflective of that. And guess what? It's the same product. So as that competitive information starts to come in, I can make some decisions and feel comfortable that it's the same product. But that's just one item. So if we continue to build this out, and you can see that it's easy to add a record, you can manually type that in, or you can upload it with a file. I'm adding additional competitors. I'm adding additional lines all on the flow. Adding those strategy inputs and the variability that needs to come in with that. And most importantly, identifying whether this item is maybe similar, the same, or you just want to ignore it. Because look, if we all sold 16-ounce Dawn dish soap, then the comparison would be straightforward. But the reality is we sell different items, and so a price is not a price is not a price. Moving on, sometimes you need to take risks. You want to assess your risks, and don't let gaps in your analysis become the stalling points in setting your price strategy. So there's always going to be the unknown. The key here is to start to build it into a known data point. If it was easy, Monkey would do it. Start with a data assessment and build an as-is and to-be state of your challenge. If data is missing, oftentimes it can be purchased. Leverage public information that's found in SEC filings for corporations or other investor informational sources to frame in that bigger picture. But your revenue streams, your product portfolio life cycles, are a great wealth of current and rearward views to help forecast what lies around the bend. And while past performance is not always an indicator of the future, many of your products will follow similar cycles, product maturity, and leverage this knowledge. While basic measures in a data cube of revenue and units and profitability are straightforward to capture, use calculated measures by combining measures to arrive at needed metrics. Here's one example. I recall a prior consulting engagement I was involved with, And the sales of this organization was highly promotional, and clearly the units sold at sale prices overshadowed any attempt to working out meaningful metrics for price change realization of regular prices. The story here is developing an algorithm that worked out regular, read that as non-promotional sales, and the units that they produced. I was able to develop a calculated measure could then be compared to promotional movement to determine both the promotional lift as well as the margin lift realized by standard price changes that weren't promotional. Finally, test your pricing. Not everything has to be a reaction to the market. Test to see how the market responds to your price decisions. Test parameters, measure those against, and then rinse and repeat. Surround yourself with analytics to prove or disprove your strategy. It's easy to take two similar markets with similar attributes and then do an A/B test. Don't be fearful of price tests. Start small, have an objective, measure the results and discuss the results with your team. Price tests are not about predicting the market moves, but more about reading the results of your pricing actions and leveraging those results on price, volume, and mix to improve profitability. So let's examine this example, and I'll go back to that Amazon reference. So here's that same chart, and I see that we're on that 3-month. We've got a competitor reaction, but it's really more about seeing some business rules in place. And I see a couple of things that are happening. Not only are we setting a promotional price, and maybe that's business rule number 1, that there's some upward price steps that are occurring. We'll call that business rule number 2. There's the length of time on a promotion, and that might be a business rule. I want to run it for different time lengths. And then ultimately, there's an abandonment of that step process, and that may be business rule number 4. So take a look at these, and you'll see that embedded is, that looks like a $20 price jump as we go from 300 to 320. But it looks like there's maybe a different rule kicking in place here. We'll call that 22. And then maybe that's repeated, another business rule, but it kind of looks like this is a little bit more. We'll call that 24. There's a reason behind this rhyme of what they're doing. So understand what's going on in the competitive world, and let's leverage that. So let's pivot to removing analytic uncertainty. You need to know where you're coming from first. So establish a baseline of understanding the price volume mix of the delta between where you were and where you were in the past, or where you are and where you were in the past. So your charts should have filtering capabilities. In this case, you can compare year to year, quarter to quarter, week to week, as you start to understand prior performance of revenue to be prior quarter, 12.1, versus current quarter of 15.9. And whether you express that in terms of dollars or percents, this being maybe a baseline of 100, and that looks like 130%, you can understand what's going on with your business. And you'll measure this either at revenue level or at margin level, because they do tell two different stories. So leverage your transaction data to serve up these alerts on product movement outside your normal parameters. So if product category XYZ is chugging along at 10% unit growth consistently, and it slows to 1%, don't wait for an analyst to uncover it at quarter end. Have those transaction alerts served up on a product manager's dashboard for quick action and recovery. Similarly, if unit sales rise sharply in 1 week and perhaps unit and revenue declines, then be on the lookout for sweetheart deals or bulk buys at discounts. In short, surround yourself with actionable insights and remove uncertainty. Just do a brief history of industry. If we fast forward from Industry 3.0, which can roughly be described as the automation of computers and electronics, the 4.0 world brings us the Internet of Things, IoT, and the combination of cyber-physical systems and interconnected networks. In rough numbers, this started in 2016. Simply put, devices communicate with each other and bring about smart changes and recommendations. So let's reimagine pricing. Reimagining shouldn't bring fear and uncertainty to your daily pricing routine, as the age-old adage of buy low, sell high is still going to ring true for tomorrow. We do want to leverage that learned data and gathering of purchase behaviors to guide our next out price and product selections for the customer. Adding to this reimagination should be adoption. User adoption of new processes, adoption of new calculations, new workflows, and new pricing tools. Using AI technology to assist decisions, whether those are to calculate a price envelope or to make smart recommendations while serving up an online shopping or quoting experience. If you're presenting manually submitted cross and upsell recommendations, you're allowing others to step in front of you in the AI line for that online experience. Here's another concept of leveraging your pricing tool to avoid leakage. Allow me to expose a couple of concepts for managing cost. So here we've got a price list, but it's more than a price list. It's smart and it's doing a number of things. You've got a live feed of cost, and that's starting to populate into your tool, and it senses change to an input, cost in this case, but it could be any observable attribute. The price strategy, as previously shown on a competitive slide where we were managing against competitive pricing, has got a couple of different strategies in place. There's a kit, there's a recommended retail price, there's a promotion strategy, and it just continues on. You can be complete with one strategy across all your product categories, or be very tactical and get down to the individual SKU or line item. So any price list, you're going to obviously have manual overrides. Whether that's allowed in your workflow or not is totally up to you. Here we're showcasing that, look, we don't want the system generated price. We're going to manually override it for whatever reason. We'll also expose those charts that I had said, and you may have one, two, or more of those analytical charts in line. Select that, and then you'll be rendering that chart for the user of the tool. And then ultimately, you're going to approve and deny whether it's a single item or groups of items all being proposed as a result of this automation. Now, this was but one use case for this solution. It's configurable in a way to process any observable attribute and take action. So for example, if inventory drops to X stocking level or service level, make a pricing or quoting change. Keeping on the inventory theme, if lead time changes, make an adjustment. If a competitor price doubles, maybe serve that up on a dashboard alert and don't follow that price until a workflow is satisfied. In a leader-follower world of products, if the leader item movement indicates a significant slowing in the past few weeks, hey, review the stock situation, adjust pricing if needed, and follow suit, or don't, with the follower items. So here's something to ponder on. In your product offering, what are your item attributes that drive price or drive value that allow you to leverage and improve your pricing performance? I spoke about workflows, and in the spirit of leveraging efficiency, we want to do more with system notifications and workflows. So if you can express it, you can administer workflows. So in a quoting sense, using this as a quoting example of smarter workflows here is we've got rules that could guide approval limits for product category managers to approve pricing minimums for margin, or they could be for price changes, and control the quoting minimum margins that prevent deals from progressing forward without approvals. Quote amounts. Be straightforward. Those CRM systems, having those approval limits in place, visible to the rep, and enforceable are critical to speeding up the quote turnaround time, often an important KPI. Finally, quote notifications. Served up via email or within the tool or mobile alerts, your sales rep will know the exact reason the quote needs further attention, so errors don't happen and the deal can progress forward. So workflows enable your business to operate faster and more efficiently. You're working smarter and not harder to leverage your time. You're probably thinking right about now, what might other companies be experiencing with a solution such as PriceFX? Allow me to talk give you some company background on John Crane, our case study here. And by the numbers, they're over 100 years in business, over $1 billion in revenue. And while they offer both manufactured and configured parts, they also have a services side. If you're not familiar with the name, they specialize in mechanical seals, packings, couplings, filtration, and predictive digital monitoring systems. They offer products to all industries that you can imagine: oil and gas, mining, pharma, water, wastewater, and the food, beverage, amongst other categories. And their pricing and quoting solution is comprised of Price Analyzer, Price Builder, Quote Configurator, and Rebate Manager. The outcome, 2.6% increase in operating income, attributable to the PriceFX solution. And you'll see SAP on this slide as well, where as PriceFX has won many awards. We're a gold partner. Many in the audience today may run SAP, as they have a large portion of the ERP market, and SAP comprises a large portion of our growing customer base. With that, I see my time is ending, so I'm going to pause, and you've had a chance to maybe think of some questions. So, Tolu, do we have any questions coming in?
Yes, we do. And thank you for that lovely presentation, Jeff. Obviously, we've practiced this before, but like listening to this again, I feel like I've learned a few more things. So I hope it was also helpful for the audience. So first question, I'm seeing now. They say, I am using basically a cost plus approach to my pricing now, but I want to expand my pricing strategy options. Does a solution like PriceFX support that? And how flexible is it to change?
Great. Cost plus is a very common strategy. You see that a lot in our engagements with customers. So yes, it supports cost plus, but it also supports a price strategy that you can think of. I'll just name off a couple that I typically see in the market: attribute-based, value-based, competitive-based, etc. And so typically category specifics are driven with this price strategy that you develop, and you saw that in the friction example where we were very tactical in how we did that. And in terms of how flexible is it to change, it's very easy. So if you think of parameters, if you go back to that friction example, having those business rules drive where you're going with that pricing strategy is all flexible, and a super user such as a pricing persona can easily adjust those.
Okay, great. I have another question coming in through. They ask, our organization is considering a software purchase for price management. Today, we have our own optimization methodology. Can your tool accept our system-generated recommendations to set a price?
There you go. We see a lot of other optimization processes out there. Many companies have their own science persona that helps with those calculations. But to answer your question, the PriceFX tool can accept external recommendations. So the answer is yes. And we can serve up those recommended prices throughout the tool. So if you think price lists, quotes, promotions, they can all be served up within those tools. I hope that answers your question.
It's good. That's perfect. Thank you. I hope it does as well, but if there's a follow-up, I'll be sure to get that. Then we have, does your tool have the ability to manage multiple pricing tiers or price points like list, dealer, net, jobber, etc.? And how does the software manage those relationships?
There you go. So managing relationships is tough. I won't go into anything other than price management relationships, but the short answer is yes. And they're accomplished through parameter tables, and they control those relationships. So they're configurable. And again, there's that word configurable that I use to each customer's needs and business rules. So if a list price has a relationship to dealer net, which has a relationship to customer, whether that's percents or an algorithm that drives those prices. So think of a parent-child price list relationship. Those are all within the parameters or business rules that you control. You're in total control of that.
Okay. I feel like this is something that's going to be very important for the audience as well. So thank you for bringing up that question. Next, I have some established segmentation now, and I don't want to adjust it in a major way for the near future. How does your software support segmentation adjustments?
Segmentation, an important topic, and I think of segmentation kind of on two different levels, product segmentation and customer segmentation. So regardless of whether it's for product or customers, it shouldn't be static. And so it's good that you're reviewing that. Our solution allows for a complete or partial updates of your segmentation, including manual overrides, because there's always something coming out of a segmentation study that says, I just don't agree with those results. I want my own line item, we'll say, or category override for that. So absolutely supports a partial segmentation and rerunning of that.
Okay. And then we have, I use external indexes to impact my price, such as commodities. How does your solution support that?
Great. So while not often used in the automotive aftermarket, if you think of industry indices, and in my mind, I'm thinking of an index, a commodity index like the London Metal Exchange or really any other, the tool itself, the PriceFX tool, can ingest these time-bound values for indices. You'll load these indices and have real-time updates to it. So whether it's past prices, these indices will have past prices, current prices, and future prices. You can ingest that and build that in to your price strategy.
Okay. Okay, so we have another one. No follow-up questions yet. They ask, does your software apply to manufacturers, i.e. companies that work with a bill of materials that ultimately price out of configured products?
Sure. So bill of materials, which we often call BOM in the industry, are something that obviously unique to every product. You'll have a separate BOM and have separate routing. So the answer is yes. We've got a full-blown bill of materials solution capable of handling all the inputs for pricing, as well as in ingesting your routing data so that you can build those building blocks, combine those building blocks up together to have a fully configured product for costing or pricing.
Okay. I know that everyone's time is valuable, but I see a couple more questions here, at least one more question. Do you think we have time for that?
Go ahead.
All right, then. So I have data from various other sources that are important to my pricing process. I can import them to what I do today, but can I import data and leverage that data?
Yeah, valid question, because as a pricer, it was something I did quite often. But yes, any external data source, and let me pause on that, any external data source can be consumed and it can be stored in a data mart, something that's within the tool. Think of that as a data warehouse, incorporated into pricing or even analyzed. So you don't have to go to IT to upload this data. It's a very simple Excel-like tool that has all the capabilities of Excel and allows you to ingest that and update the system if you're given permissions to do a number of different things. But particularly in this question, yeah, you can upload data and then use that throughout the tool. Great question.
Okay, perfect. All right, then. So I think that will bring us to the end of our webinar. Thank you very much. Thank you very much, Jeff, for all of your lovely insights. And I hope that for the audience or for the participants that it's been helpful.